Hey everybody, my name is Derek Burke. I'm one of the partners here at Southard Beckham. On the line with me, we've got Debbie Corrington, another partner in our firm, and we also have Nicole Urbanski, who is one of our managers and CPAs. Friday, May 15th, we had some SBA guidance come out. Actually, the loan forgiveness application was released, which is a good thing and a bad thing. It certainly answers some of the questions we have, but there's also still a number of questions left unanswered. So what we want to do today is just go through some of the highlights of the application and kind of share what we learned that the application, the information that it's giving us, and just talk through that a little bit. So we're going to start off with what the covered period is. I think most of us felt pretty comfortable with this already. The 8-week covered period basically begins on the day you receive the funds and ends 8 weeks after that date. So essentially 56 days later. So there's a few people that thought this might mean 2 months. That's not the case. It is 56 days. So it's a little different than how we calculated the original loan amounts when applying for the PPP loans. So one of the benefits in the instructions is they allow you to choose an alternative payroll covered period. It's an option. It's not something you have to do. But basically what that does is that allows you to align your payroll periods with your covered period, your 8-week covered period for the loan. So as an example, if you were to receive the funds on April 20th, you and your the first day of your pay period, it wasn't until April 26th. This alternative payroll cover period allows you to choose April 26th as the beginning of your 8-week period as it relates to your payroll cost only. So this does not include your rent or utilities or mortgage interest. It's just related to your payroll cost. So that's beneficial, again, for our clients that wanted to line up payroll period with the 8-week covered period. One of the other things that they provided, which is beneficial to borrowers, is that payroll costs incurred but not paid before the end of the covered period will be allowed to count towards your loan forgiveness. So essentially, let's say that your last payroll period of the 8-week period spans, let's just say June 24th through July 7th, right? So there's a 2-week gap in there. Essentially, they're going to allow you to count the payroll incurred in that last week of your 8-week covered period and count it towards your loan forgiveness, even though it wasn't paid in that 8-week period. So as long as you do pay that by your next payroll, your first payroll period after your 8-week period, that will count as an eligible payroll cost. Moving on, another item that they provided clarity on is you do not have to use at least 75% of the loan towards payroll cost in order to get some forgiveness. There was some concern there that they were going to use that as a cliff, meaning if you didn't meet that 75% minimum on the payroll cost, that you wouldn't be eligible for any loan forgiveness. That's not the case. It will be a reduced amount, but you will still be eligible for loan forgiveness. All right, moving on to our non-payroll costs. These essentially consist of mortgage interest on debt obligations that were in place prior to February 15th, 2020. You can pay mortgage interest, rent, or utilities, and they just need to be paid or incurred during your 8-week covered period, which does leave us with a few questions. And Nicole's going to touch on that a little bit later. But it does indicate that we can potentially pay for some expenses that maybe we incurred in March, but we didn't receive our PPP funds until April. And if we paid those during our 8-week covered period, those would be eligible expenses as it relates to the non-payroll costs. So hopefully we'll get a little more guidance on that. The other thing that it clarified for us was that utilities include electricity, gas, water, transportation, which our understanding of that, it's basically business vehicle fuel, Utilities also include telephone and internet costs. One of the other areas that it clarified for us was the owner compensation limits. We've been getting a lot of questions on whether or not owners can increase their compensation if they were less than the $100,000 annualized limitation. The answer to that is no. So unfortunately, they're going to limit the maximum owner payroll compensation to the lesser of $15,385, which is essentially equivalent to the 850 seconds of $100,000 limitation that we've been aware of. So it's the lesser of that number or the 8-week equivalent of your 2019 compensation. So if you take 850 seconds of your 2019 compensation, and that's less than the $15,385, then that's the maximum amount you can use towards loan forgiveness for this application. Two other items that it clarified was owner health insurance premiums and owner retirement contributions are not eligible payroll costs. So you can use employee health insurance premiums and employer paid retirement contributions for employees as payroll costs, but the cost specific to the owners will not be eligible for the loan forgiveness. The last thing I'm going to touch on here is a full-time equivalent. They did give us what that calculation entails. And so essentially they define a full-time equivalent as someone who works 40 or more hours per week. So if you work 40 or more per week, you're the equivalent of 1.0 full-time equivalent employees. Anybody less than 40 hours per week is essentially going to be, you're going to take the average number of hours they work per week and divide that by 40. So let's say you have an employee that works 30 hours per week. You'll take 30, divide it by 40, it comes to 0.75. They tell us to round to the nearest tenth, so we'd actually round that up to 0.8. And so somebody that works 30 hours per week would be the equivalent of 0.8 full-time equivalent employees. They also allow us to use a simplified method. Basically, any employee that works 40 hours or more is the equivalent of one full-time equivalent. Anybody that works less than 40 hours is automatically assigned 0.5 full-time equivalent. So that can be beneficial in certain cases, and it might be something that we kind of have to play with the numbers on our calculations to see if that does benefit us in maximizing loan forgiveness. So with that, I'm going to hand it over to Debbie, who will be touching base with us on the safe harbor.
Okay, so it will be important to run the numbers. I think we're going to have to take a close look at several periods of time and look at how many full-time employees you have based on what Derek just said. And I think you want to run both calculations of whether you want to use the simplified or not, because we need to determine which one is going to give you the most forgiveness. With that being said, they did build into the application some safe harbors, some basic outs that mean you meet the requirements where you may not have technically met them before. And the first one has to do with the wage reduction. So there's a potential for your loan to be limited, or your loan forgiveness to be limited based on both whether or not you pay enough wages and whether or not you bring back enough people. And for each one of those scenarios, they've built in the safe harbors. So first one on the wage reduction, if you use the 75% of the PPP towards payroll, and you bring your compensation levels back by June 30th to what they were prior to February 15th, then you'll meet this safe harbor and you won't have to reduce the loan forgiveness by a wage calculation. Along with that, there's also the head count. If you restore your full-time equivalent head count by June 30th, even if it was lower during the covered period or even lower at February 15th, if your full-time equivalent headcount at June 30th is the same as it was on January 1st, then you will have met the safe harbor and you won't have to apply a reduction to the forgiveness based on headcount. So with the headcount calculations, any employees that refuse to come back to work, if they voluntarily requested to reduce their hours, if they were fired for cause, these people will not count towards your full-time equivalent calculation. You can completely exclude them. You will want to make sure that you have documentation to support that your classification of termination or their refusal to return. I know we have some clients that are sending out certified letters and to their employees saying, we're offering you your position back. Please let us know by this date what your intentions are. And if they don't come back, then using that for basically that they've quit. Okay, so let's turn our attention to how much of the loan can be forgiven. Obviously, the maximum amount of the loan that can be forgiven is 100% of what you received. So how do you obtain the 100%? Well, you have to first spend 75% of it towards your payroll cost. You have to either meet the safe harbor or one of the safe harbors for the wage reduction and also meet the full-time equivalent headcount. So let's say you don't meet that, then the forgiveness amount or the maximum amount not forgiven will be either your payroll costs times 75%. So basically no more than 25% can go towards any other eligible cost. Then the third one is if your total eligible costs are less than, or take that less the salary reduction, less the headcount reduction, and then that's going to give you your loan forgiveness. So with that, I'll turn it over to Nicole to talk about how to document this and what you need to be gathering now so that you're not left out in the cold.
Thanks, Debbie. So as you go through the process, sort of like life in general, it's easier if you just accumulate everything as you go along instead of waiting to the end to try and pull everything together. And one of the benefits is they're telling us now what documents are going to be needed in order to substantiate your application for loan forgiveness. So one of our recommendations is that you either keep a file, either virtual or a hard copy file, to put everything in it as you find it or as you pay it. You know, if you have a canceled check, make a copy of it and throw it in the file. It's just a good way to sort of get everything together as you go through the 8 weeks. We're not sure on when your 8 weeks is over, how long you have to apply. We do know that once you've applied, the lenders are supposed to give you an answer to how much forgiveness you're able to achieve within 60 days. So my guess is that's going to be about 60 days. But we don't know how long of a window you're going to have after your 8-week period ends and your forgiveness application term ends. So it's important to have everything ready to go. So we talked about the different elements, the payroll forgiveness and the non-payroll forgiveness. So for the payroll, most of these documents that are being requested can be generated through a third-party service provider, you know, ADP, Paychecks, QuickBooks Online, and they're pretty easily accessible. It's just good to get them as you go along. So the first thing that you could get even now is the payroll periods or the payroll reports for the periods of the 2 look-back periods that you can basically pick from. So you want to have detailed payroll reports for February 15th, 2019 through June 29th, 2019, or January 1, 2020 to February 1, 2020. So those are your 2 look-back windows that you want to have detailed payroll reports already accumulated and set aside for. The detailed payroll report should include the individual employee's name, the total hours that they were compensated for, as well as the total wages paid. So usually if you go on to ADP and you find a detailed payroll report, it's going to include all of that information. But those are the key things that you want in the report that you're getting. So you want those for the 2 look-back periods. Then as you pay payroll during your 8-week window, your alternative payroll window, you want to make sure you generate the detailed payroll reports, stick them in the file, go along. So again, make sure you're showing employee, total compensation, total hours. In addition, you're going to want to have the Form 941, which is the federal employer quarterly federal tax return. This is the report that gets filed every quarter. So when you file that, or when you get a copy of that, go ahead and put it in the file. You'll also want to maintain your state quarterly reports as well. This is for your state unemployment, state workers' compensation, whatever you're reporting to the state for employee wages paid. The other piece of the payroll is you want to have copies of canceled checks and or invoices for employer provided health insurance benefits and retirement contributions. I'll touch on the retirement contributions a little bit again at the end. But as you get that invoice from the health insurance provider and you pay it, make sure you match your check with the invoice, make a copy, stuff it in your file. For the non-payroll items, as Derek was telling us, we get rent payments. That's one of the ones that's in the 25% that can be included. So rents for personal or real property. This will be for lease agreements that were in place on or before February 15th of 2020. So you're going to want to go find a copy of your annual lease. I imagine that might take some doing for some. If you're not sure where it's at, it's best to start looking for it now. Get a copy, stuff it in your file. So you're going to want a copy of your annual lease, and then you want copies of the canceled checks or other proof of payment for eligible rent amounts during your covered 8-week period. So if you do an EFT, just try and take a screenshot of that, make it print out, stick it in your file. So it looks like if you pay any back rent during the 8 weeks, that's going to be eligible, but we're not sure on any prepayment of rents. We'll talk about that one again in a little bit. And that's for personal or real property again. So utilities, that's another one that you can have. So the documentation that they're going to want for that is invoices or bills from February 2020 and copies of bills or invoices paid during the cover period, and copies of canceled checks or account statements verifying eligible payments. So basically, you know, you get your gas bill, says how much you pay for this cycle, but then it'll also tell you how much you paid last cycle. So make sure you sort of keep those up with the copies of the canceled checks, have those copied and set in your file. You can do business loan interest payments, which will be interest paid on loan obligations in place, again, before February 15th, 2020. Oh, on a side note, the utilities is also in place as of February 15th, 2020. So if you had a cell phone in service before that, that would be included. But if you added a cell phone after that, you wouldn't be able to include that. So the business and loan interest payments, that's interest on the loan obligations before February 15th, 2020. And it's only the interest portion that's includable. So to substantiate your interest portion, this is again on, and it can be for real estate if you're paying a mortgage, or it can be for equipment if you're paying on equipment. I know when you buy property, they'll give you that giant amortization schedule that takes up like 300 pages. So that's called the lender amortization schedule. And that would be proof that they will accept. And that breaks out your payment between principal and interest for the months covered that'll be looked at. They'll also take copies of lender account statements from February 2020 and the months covered. Additionally, they want 1 month after the covered period on business loan obligations. So if your 8-week window ended on June 1, you would need to include that June 1 to June 30th lender account statement in your documents to your submission for loan forgiveness. I think I've covered all of those. Derek and Debbie, did I miss any?
You're good.
All right, perfect. So one thing we want to point out is that we expect more guidance to be coming out. because we still have remaining questions. And in particular, we are looking for guidance to address what amounts can be included in the retirement contribution payments. Nothing has really given us a concrete answer on, is it last year's payments? Is it this year's payments? Is it just the safe harbor? Is it the profit sharing? Nothing has answered that question for us, and nothing in the guidance that just issued has answered that. So that's one we're still looking for. We want to know if there's any ability to prepay the rent or utilities. Are you able to pay your employees bonus or increase their wages during your 8-week window? That hasn't been addressed. And is there any special treatment for wages paid to family employed members, employed family members, either that could be beneficial or detrimental to the borrower? It's likely that you have questions as well, so we encourage you to shoot us an email so that we can be on the lookout to answer your specific questions. And we want to thank you for watching this presentation. We hope that you found it helpful and informative, and we want everyone to stay safe and healthy. Thanks, guys.
Thank you.